Hello, and welcome to episode 98 of Design Curious Podcast. I'm your host and mentor, Rebecca Ward. I hope you are enjoying your summer in the middle of it. It's very hot here in Sacramento. While you're staying cool, I'm going to tell you about our guest today. Her name is Danielle Hendon. She's the founder and owner of Four Corners CFO, a firm offering financial advisory services to small business owners on a scale that fits their company and budget. Coupling her decade of experience in corporate finance and accounting with her passion for small business owners, Danielle brings the benefit of big business financial analysis to entrepreneurs. Now, instead of helping corporations increase share price, Danielle gets to help business owners increase their personal livelihoods so they can leave a legacy and lasting impact on their community. I love in this episode, she shares how she transitioned her career. I know a lot of you listening are second career designers or thinking about becoming a designer from another career. So she understands and is sympathetic to the fears that you might have of jumping from one to the next and making sure that it's financially viable. So you're going to want to listen to this episode. Let's talk with Danielle. You're now listening to Design Curious, a place where you, creative one, are here to learn about what it really is like to be an interior designer. And I'm your host and mentor, Rebecca Ward. If you're worried about how to succeed in a creative career, if you're ready to learn your next steps to become an interior designer, and if you want the satisfaction of doing something you love every day, you are in the right place. Grab a coffee, a notebook, and let's dig into today's episode. Hi, Danielle. Welcome to Design Curious Podcast. So great to have you here.
Thank you so much for having me. I love any chance I can get to talk numbers with people and get them to maybe just take a peek at their own numbers.
Yes, it's such an important part of being a designer, owning your business, or even working for someone else. You need to be familiar with the numbers. And I am just pleased to have you here today. I've heard you on other podcasts, and you're just a wealth of knowledge. We were talking just a minute ago about how you also went through the transition from one career to the next, which is a lot of what our audience does. So why don't you share kind of your path and your story, how you got to where you are now?
Yeah, it's honestly one of my favorite stories to tell because I never saw any of it coming. Like, a good book is the one that you're turning the pages to figure out where it goes. I actually started my career in college as a music major. I thought I was going to sing opera for a living until I had an English professor that sat us down and made us write a paper about the future of our career path. And I realized very quickly, I do not have friends in high places and I'm going to be broke. I did have friends in the business school at college, so I jumped over, tried a couple of accounting classes, and actually loved it. I loved everything about it. So I finished a master's in accounting, and I did like all of us do, and I went into public accounting on the other side of that. Then I started a family and didn't want to be working 60-hour weeks with a newborn at home, which is often what triggers a lot of us to change career paths.
Yes, definitely.
I didn't quite change career paths then. I went into the industry side of accounting. So leaving public and leaving the firm to go work at an oil and gas company. I'm in the Houston area. So a lot of us are oil and gas affiliated in some way.
Yes.
So I was there for about 10 years when they went through bankruptcy. And on the other side, they started slicing and dicing. The bankers owned it all and sold everything off. And then the pandemic hit. And while I never want to take away from the downside to the pandemic, I feel like there was a silver lining for so many of us where we all just slowed down. And I got to see a completely different perspective of parenting. I will admit I was a workaholic. When you love what you do it a lot. And the pandemic gave me a chance to get a completely different perspective on parenting. And get to know the teachers, get to figure out how to do the homework, get them to swim practice, meet the friends and the coaches and the other moms. And I honestly hadn't done that before. So as the pandemic started to, I don't want to say come to a close because I know people are still dealing with a lot of things, but as it sort of started to turn around and people were going back to the office, and I was getting laid off because they were selling it for pennies on the dollar.
Yeah.
I had this option of, do I go get another position running an audit department, working downtown, go back to what we were doing before, or do I take a leap of faith and try something different? Do I make family and flexibility just as important to me as our finances? And that's exactly what I did. I don't
Oh.
think anybody would intentionally say they're grateful for going through bankruptcy, but I realized having taken that billion-dollar business down to about 20 people when I got let go,
Yeah.
I know how to make these big business concepts fit a really small business. And instead of helping corporations increase share prices, I can help small businesses increase livelihoods and legacies. And I get to be the, what do they say, the pebble in the pond and create the ripple effects in the world. And that just feels so amazing on the other side.
Yeah. Oh, that's great. That's a great story. And now here you are doing something that you love, and you can find that balance in your career, in your home life, and all the great things. Yeah, that is definitely something I feel like a lot of our audience faces is that fear of like going for what is really calling you, but trying to understand if they're going to make money doing it, you
It's
know?
so scary.
Yeah.
And I definitely don't think I could have done it without what I'll call a safety net, without a little bit of a nest egg. You've got to know that you can give this time because no business is going to hit the ground running and make $1 million. Like the statistics behind like the first 3 years in business are really scary to go look at. I actually do not recommend you look them up.
Yeah, don't do it.
But there's so much more to that leap of faith. And it truly is a leap of faith. It's setting some groundwork. I'm a huge fan of what I'll call calculated risk. I
Okay.
knew the risk we were taking. Like, what are my limits here? How long am I willing to give this? How long can we last if I don't make a penny? Like, what is the limitation of this? And
Hmm.
being realistic, I think when I first started it, I told myself, we've got 2 years. If I can't get back to like corporate-ish close salary in 2 years, I know I can go back to corporate any day. I don't want
Yeah.
to. I
Yeah.
never want to. But I knew that we could penny pinch internally at home and
Hmm.
we could make this, if I made this bare minimum of X amount of dollars in the first year, then we'll be okay. And then we'll go into the second year. And if I can
Hmm.
make whatever, then we'll go and just keep going at that pace. But I will say one of my favorite parts of running this business, and one of the best things I did when I started it, is I'm a huge fan of Profit First. I'm not
Yes.
technically Profit First certified,
Yeah.
but I'm a huge fan of all of the way that he thinks about numbers and making
Yes.
sure that we prioritize our profit, especially as women in business.
Hmm.
We tend to take the back seat in a lot of things in life and take care of everyone else.
Hmm.
And we do that in business just as much as we do it personally.
Oh, yeah.
And if you don't prioritize that profit, you will find yourself paying everybody else all of the bills and the contractors and even giving discounts to your clients before you pay yourself.
Uh-huh. Oh, yeah. I'm guilty of all of that. I definitely love Profit First. And it was such an eye-opener when I read it. And I have all the people who go through my mentorship program read that as well because it's such a great tool to understand how to set up your finances. So let's kind of lean into that a little bit and talk about how you can set up your cash flow and your business in those first few years for that feast famine cycle that you're inevitably going to go through.
Absolutely. And the biggest part of it is going to be making sure that you're pricing properly to cover that feast or famine cycle, to cover paying yourself when
Hmm.
you don't have clients. There are going to be highs and lows that just inevitably, when you have a project-based business, the more time you spend in it, the more you'll be able to predict those highs and lows. But
Hmm.
what I can guarantee for anyone starting out, there will be highs and lows. So we want to kind of anticipate what that worst case scenario is. And I say this from both like a technical accounting perspective, but also from a mindset perspective. If you walk yourself through mentally what that worst case scenario is and all the feels behind it, then it's not as scary anymore. And you can then mentally go say, let's look at the logistics and the numbers and make sure we prepare for it. So project-based businesses are going to have months that are really busy and bring in a lot of money, and months that are not so busy, but still have expenses. You still need to pay yourself because you still have to pay bills at home. You still need to pay for your website, for your cell phone, for your internet, for any social media that you might be paying for. I know that's such a big deal for designers is getting all those looks out there. We want to make sure you've got that presence because that's what's going to keep filling the pipeline. So if we think about cash flow in terms of consistency, which sounds crazy when we say feast or famine, I want you to think of those consistent expenses that are going to hit whether or not you have a client. For those that are just starting out, let's just say, let's look at it for the year. Normally, I would say you want to look at it from like the start of your business cycle to the end. But if you're not even sure what that's going to look like, let's say January through December. So for 12 months, what does it cost to run your business? Even if you never got a client, what does it cost to pay your bills at home? What does it cost for the cell phone, the internet, the website, the software?
Yeah.
Without shiny object syndrome, because I get it too. But what is all of that going to cost you to run your business? And when you think about the projects that come in, you need to price yourself so that you're covering those costs for the year. So if you anticipate 5 design clients this year, those 5 design clients need to cover the whole 12 months of expenses, not just 5 months of expenses or 8 months of expenses. It needs to cover the whole thing. And making sure that you price yourself to do that involves understanding how much money you need to make per hour and how much you're going to charge your clients. And a lot of times, again, I'm going to go to women in business. We tend to not price ourselves nearly as high as we can and should.
Yes. It is pretty much a fact that I've seen so much of. Yeah.
I mean, it's back to that backseat kind of thing. We are, at least the people that I work with are traditionally givers. We want to give. And I get it. I'm a giver. But you've got to pay the bills. And one of my favorite things to tell people, especially when you're just starting out and you want to be the giver, is you cannot continue to help people if you burn out or you go bankrupt.
Yeah, that's right. Yeah, you have to stay in business in order to continue to help people.
Absolutely.
That's what you have to keep in mind when you're setting your prices. Do you work with a lot of interior designers or just all over the map?
We've got a pretty good mix of clients, from attorneys to interior designers to wedding planners, and yeah, all over the board. I've got a therapist that I love working with. We've got tutors, but a lot of service-based businesses where either it's project oriented or it's recurring, but it's figuring out what is their value per hour is a big part of what we do, because I also want to remind people, if you want to grow your business, and all of us want to one day be able to step away from our business. Like that's the end goal of any business owner, is to not actually have to run your business.
Right.
And if you're going to do that, you have to be able to pay somebody else to do it. And they're not going to take a $0 salary.
Right. Exactly. So yeah, I was guilty of this for a while. When I hired my first employee, she was making more than I was.
Oh, we've all been there.
Yeah.
I've had employees that made more than me. They don't know they made more than me, but they did.
Yeah. Yeah. It's so hard. Yeah. I think it is the women service businesses are just not, I don't know, maybe we just didn't have the right role models growing up or something, we're just programmed to like be more giving about that and not value our worth or the skills that we bring to the table. So
it feels greedy or selfish or boastful, whereas, and that's where I keep coming back to, and I tell this to myself, if I don't charge this much and I just help everybody for free, I'm not going to be able to keep helping everybody. And I really want to help people.
Yeah. So pay yourself first. That's good. That's good. Good way to start. So pay yourself, figure out your overhead and all of your expenses for the first year. What else can an up-and-coming designer do as they're starting their business out?
One of the biggest pitfalls I have seen with our interior designer clients is not tracking what they've spent on a project on behalf of the client. So a lot of our interior designers, your pricing is twofold. It's the hours you put into the design project. But then it's also all of the things you buy, the orders you place. And those may take months to come in. And you might have placed an order in January, but it doesn't hit your credit card until June when you've completely forgotten about it. And what I have seen is two different things can come up from that. A, we forget to invoice the client for it. Or B, we forget that we've ordered it, invoice the client, collect the money, and it's about to come out of our bank account in the future, but hasn't yet. So really pinning down what those materials are that you purchase, make sure that you know what they are and which project they go with, and then understanding, did we invoice it? And has it hit the bank account or the credit card yet? Because cash is king. And we were talking about that feast or famine. Part of that comes from these huge delays that can happen from the warehouses. You might have ordered blinds and it's not actually going to hit your credit card for 3 months. You're going to completely forget about that by then. So what I love to see people do is work with their bookkeeper. And I hope you all hire a bookkeeper first thing. It is not worth your time and effort to figure out QuickBooks. You can find some really great priced bookkeepers out there.
Yes.
Work with your bookkeeper so that when you know what those costs are and you've invoiced your client for them, they go into an accounts payable section of your books so that you know this money is going to eventually hit your bank account or your credit card. And it's not a surprise. It's sitting in a line item that you know is out there. It's coming. That way you don't end up with all these random things coming in and you're like, oh, crud, now I can't make payroll.
Right. Yeah, we don't want any surprises when it comes to your finances.
The other thing I love about tracking those costs, and I will say, and tracking your hours, I know nobody likes to do it, but it's really important, is then you get to look back at a project and say, did I actually make money? And if you didn't make money, you definitely need to be charging more.
Yeah, for sure. Oh, those are good indicators. Yeah. What about other things like savings or just to help with cash flow? Is there, because starting out a business as a service base, sometimes you can do it pretty minimally. You don't necessarily have to take out a loan for starting up, but is it recommended that someone have access to cash flow in case something comes along?
Inevitably something will come along. So I want to make that statement and say something's going to happen. If nothing else, the pandemic showed us the craziest things can happen.
Yeah.
But there's a couple of different ways you can approach it. You could do like I did and have that nest egg where you're like, okay, this is what we're going to draw from to pay the personal bills while we go through this process. If that is not an option to you, it doesn't mean you can't start a business. It just means one of two things. You're going to try to go get a line of credit. It is my favorite form of debt. It is basically like cash you can go draw from and put back whenever you want. There is interest, but it's not as bad as a credit card.
Right.
And it gives you enough space to have peace of mind and make the best decision in the moment.
Yeah.
A lot of times when those things inevitably do happen, we are scrambling for any income we can get. You will take any job and you will probably underprice it and you will probably technically lose money if you considered your payroll, but you'll take it because the bank account's empty.
Right.
Whereas if you had that line of credit and you knew you could go draw into it, you would probably go, no, that is not somebody I want to work with.
Yeah.
And you'd be okay doing that.
Right.
So I love a line of credit. It is not the easiest thing to get as a startup, but it's not impossible. The other thing I will say is there's a lot of really great 0% interest credit cards. I'm not a huge fan of racking up credit card debt, but if you have a 0% credit card that you can lean into, if you can't get that line of credit, it can act the same way. You just have to have a slightly different mindset about it. The thing I don't like about credit cards is that a lot of people, when they do rack them up, they look at that total balance due and it feels very heavy because it feels like it's due right now. That whole thing needs to be paid. Versus a line of credit or what we call a term loan. So like your car note is an example of a term loan. If you compared a $20,000 maxed out credit card to a $20,000 car note, the car note doesn't feel heavy. It's $500 a month maybe. Right. And you're like, whatever, I got that. The $20,000 credit card feels heavy every single month, and it
Yeah.
feels like it needs to be gone. And that's the part that you have to be careful if you are going to go the 0% credit card route. You've got to kind of train your brain to treat it like a loan. If we're going to go put a whole bunch of money on this, I'm going to pay this off in whatever increments over the next few months before the interest hits.
Yeah, and I notice a lot of what we're saying is the emotional part of making financial decisions. Like, or you might make a decision because it feels a certain way and it might not actually be the facts. How can we avoid making bad decisions based on how we're feeling in the moment?
So, one of the things I try to do personally is not to make a decision if I'm feeling emotional. Like, do not make a decision in an emotional moment and give myself time to step back and figure out what those emotions are. Because I don't want to take away from anybody listening to this. The emotions are valid. Being afraid of an empty bank account and grabbing at every dollar you possibly can is completely normal, but it doesn't necessarily make it the best decision for your business. It's not a bad decision per se if it keeps the business moving and it keeps things going, but you might be miserable working on whatever that job is. So I like to say giving yourself space and grace. Find a way to give yourself some space and grace mentally. And sometimes that means physically, like the line of credit or the credit card, or how can you provide some of that mental space so that you're not in panic mode and you're not reacting from this scarcity side of things instead of, I love living in the abundant mindset. I feel like everything comes to us when we need it. We just have to be willing to go get it.
That's great. Yeah, I like that. So tell us a little bit more about your company now and how can you help people who are starting out in their business, or just what can you do for people with your expertise? Yeah.
We work with a lot of different clients in a 6-part framework that we call Reveal Your Path to Profit. And that 6-part framework applies no matter how big or small you are. It's all the different parts of your financial statements, from balance sheet to budget to cash flow, so that you can see and take control of where your business is going. We go through the balance sheet to figure out what that looks like. Do you have credit card debt? Do you have money in the bank account? Do you have huge receivables out there that we need to go get people to pay? What does the balance sheet look like? And then we dig into, what are your different revenue streams? How does money come into the business? And what do you have to pay to generate that revenue? What are the costs and what is the income? And we start modeling that out so that we can build out a little bit of a budget. And then we take and we look at all the other expenses, the cell phone, the internet, the software, and we layer that in to figure out what are those regular consistent costs, to build out a budget and figure out in that 4th part, where do we land? Is this where we want the business to be going? And once we know where the business is going, we can start to compare what's actually happening every single month to what we thought would happen. Because believe it or not, at least for my clients, the goal of a budget is not actually to hit the budget. It's to understand why we don't hit the budget.
Okay.
If the numbers are coming in high, let's figure out why. Do we need to make an adjustment in the budget, or do we need to make an adjustment in the business? And it gives you the time and availability to do that. You can pivot in your business because you saw the story in your numbers. And then the very last thing we touch is the cash flow, and looking at it from a budget perspective. So we take the budget, but then we add in timing elements. So if you usually take 3 months to ship something, it might have hit the budget and the income statement, but it's not going to hit your bank account for 3 more months. And we just want to model out that, because at the end of the day, cash is king. And we want to make sure that we know how much money is going to be left in that bank account.
Okay, that's great. So how can people reach out to you if they want to use this service? Because it sounds like it's exactly what every business needs to really be profitable.
I love it. They can find us. We're going to have a landing page just for you guys.
Oh, great.
It'll be the number 4 cornerscfo.com/design curious. And we will actually put one of our freebies there that walks through those same 6 parts of what does it mean to go through the 6 parts? What are they? And we are working to launch a course in the next 2 months that'll do all of that in online video content for the smaller business owners that aren't quite ready for a fractional CFO yet.
Right. And just explain a little bit more like that term fractional CFO. Like,
Yeah.
why would you want to have a fractional CFO?
So your bookkeeper is the one organizing your numbers and they're making everything make sense on paper. And then your tax person, whether a CPA or an EA, is making sure you stay in compliance for your taxes. And if you've got a really good one, they're helping you strategize some of those tax deductions. But none of that, those are both looking in the past. They're looking what has already happened in your business. They're not looking into the future. And a fractional CFO's job is to help you look into the future of your business so that you can direct exactly where you want it to go.
Perfect. Okay. Yeah, that's a great definition because you really do need this like financial team. You have your bookkeeper for your day to day. And just like you said, and surrounding yourself with these experts who really can show you different areas of your business gives you the full picture. So that's great. Well, thank you, Danielle. I think that people are going to get a lot out of what you just had to say today, and they're definitely going to reach out to get more of you because it's so helpful.
Thank you so much. This has been so much fun. And like I said, any chance to get somebody to even open their books and look at them and just peek into those numbers just a little bit. Again, I know we've talked a lot of mindset, but so many of us put our head in the sand and just hope that things keep going the way they're going instead of taking control and taking action.
Yeah. So learn from my mistakes because that's what I did for at least the good first 6 years. I was like crossing my fingers every month that we're going to have everything covered. And it's not the way to live. Yeah. So definitely don't do that and start out with a fractional CFO and you reach out to Danielle. We'll put all those links in the show notes so everybody can go and find you. And yeah, thanks for coming on today. And any other great advice you might have for someone because you did it yourself, someone who's maybe switching careers or up and coming designer that you'd like to leave with them?
It is probably one of the scariest decisions you'll ever make, but if it's truly your passion, you are going to be so much happier on the other side.
Yeah, it's worth it. It's worth the struggle, worth the fear of the change and all of that. Well, thank you so much, Danielle. It's lovely having you on today.
Thank you so much.
Such a wonderful conversation with Danielle. There's so much to learn and overcome when understanding your business finances. And so she can definitely help you with that. I just love her story. And I think that she can definitely be helpful if you're looking for a team as you get started with your business. So reach out to Danielle. We have all her links in the show notes. And that's it for this week. Stay tuned because episode 100 is coming and we have that great giveaway, great interview with my designer. So stay tuned. And until then, stay creative. Thanks for listening. If you love this episode, please leave a rating and a review. This helps me reach other curious creatives like you. If you have a topic request or would like to contact me, simply head over to my website, rwarddesign.com, or email me at podcast@rwarddesign.com.